It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Monday evening, June 29th, 2015. Hope you guys had a great summertime weekend. Before I jump into tonight's jam-packed newsletter, and we get a lot to cover here tonight, the reaction to the news out of Greece over the weekend, we'll be jumping right into that right away. Before we go into charts, though, I do want to remind you, everything I talk about here in the newsletter video tonight, I teach to all of our students here at schooloftrade.com. Head over to schooloftrade.com, grab our free trial. I'm going to send you an invite to attend our live trade room as a guest. You can also learn more about it on our website. I'll talk more about that towards the end of the video here tonight. Also, a couple things here before we start. I do want to remind you guys to make sure you're watching this video on our trading blog over here at sidewaysmarkets.com. There are 3 reasons why you should be watching this video on our trading blog. 1, you can download all the charts you're going to see me using in tonight's video. There's a link right below tonight's video on the trading blog here at Sideways Markets. You can download all those charts and use them at your leisure tomorrow. Second thing, if you're not a member here at schooloftrade.com and you'd like to get a free pass to come out and attend our live trade room, I'd love to invite you in, make you a member for a day, come out and see how we do things in our live trade room as part of our free pass, upper left-hand corner. And last but not least, just above my ugly mug, you'll see a spot for your name and your email address to join our nightly newsletter mailing list. That's right, now you'll never have to worry about missing out on another newsletter ever again. I'll send you an email every evening. All I need is your name and your email address in that box in the lower left-hand corner. And then, guys, if you grab your free pass or if you register for the nightly newsletter mailing list, I'm going to send you a verification email. So make sure you check your inbox, outbox, spam folders, junk folders. Make sure you find that verification email because I'm going to send you a verification email so you can give me approval to keep sending you emails in the future. Alrighty? Hope you guys had a great summertime weekend. No shortage of volatility. Boy, we saw more volatility the past 24 hours in these markets than we've seen since 2008. Very volatile, gaps up, gaps down. And for the most part, we got pretty much all the gaps filled, and at least the attempt to fill all the gap, right? That was pretty much what we were focused on this morning as we came in around the opening bell this morning. We knew we had these gaps that we're going to try to get filled, but good example right here on the S&P. Here's an example where we had such a huge gap. I mean, this is nothing to sneeze about. What was it, a 34-point gap down? I mean, this thing was a monster to the downside. So it's just such a huge gap to make up, and then it collapses right back down. Let's jump right into the S&P here, kick it off this evening. S&P is bearish. Oversold this evening after a massive, I mean, it's tough to really understand. This was a big gap on the S&P. This is the S&P we're talking about. This thing does not move that much. This is not gold. This is not the Dow. This is not crude. This is the S&P. Highly liquid market. It's got a range like the bonds or euro. It's not going to move like this. Then we come in, we see this huge gap here. It's like, oh my goodness. This is going to be fun here today. And you can see, boy, it even pushed down even lower. They almost made it all the way back to a full gap fill. I mean, it's pretty remarkable before they said, oh, that's about it. And then they took it right back down here. So we clearly have a bearish market right now. We've known about a bearish market in the S&P for a few weeks now. This is nothing new. Remember, last time we spoke on Thursday evening last week, the exact words were expecting this thing to keep going lower. This is just, of course, the fast forward button a little bit for us and gap down. So we already saw the attempt to fill the gap, so we're not going to worry about the gap being filled right now. You know, most gaps get filled, but when they get filled, that's always the question mark, right? So the attempt at the gap fill is behind us. We're not going to worry about that going forward. But what we do really worry about right now is the fact that we are so oversold. And so when we're oversold, you know, oversold is not really a great term to use to describe things because, let's be honest, this market can go as low as it wants, well, within the exchange rules of limit up or limit down, but there's nothing keeping this market from continuing to go lower, continuing to go higher. So oversold, overbought, not a good way to, not really an accurate way to describe it. It's really lack of a better term. Let's put it that way. So bottom line here is we did make a new lower low here from earlier this morning. They got the 200 moving average all the way back up. Sellers are fully committed right now. I mean, you can just feel it. You can feel those sellers are fully committed. Very difficult to be a seller down here. very difficult to be a seller down here. The bottom line is there's just not a lot more room for this to keep going lower. We got some major support waiting for us at 43.5. And again, I mean, with the only real opportunity for this to keep going lower would be to test this channel low. That's really the only rationale of this price going any lower than it is right now, more than just a little tidbit lower and then reversing back up. So right now, could it go lower? Absolutely, it could go lower. But where's going to be the highest percentage trades right now? Let's not forget about, we're not really here to explore what could happen. We're here as traders to take the highest percentage trading opportunities. And the highest percentage opportunities in the short term are going to be long, and then in the long term are going to, of course, be selling back down again, right? So that's going to be your highest percentage opportunities right now. What I'd be looking for is buyers, you guys have the short-term trades as we push back up into resistance. Sellers, you guys stay patient, wait for the best trades to come as we go back up to those highs. If I want to sell, I want to sell at resistance. Where am I right now? On that support. If I want to buy, do I want to buy at a discounted price or at a premium price? I want to buy at a discounted price. We're at a discounted price right now. So you're going to see some profit taking from the sellers, some bargain hunting from the bulls, right? The buyers will be bargain hunting down here for buyers. And so, again, what I'd be looking for right now is just failure patterns from these sellers. Now, like I say every time, right? There are three ways to trade this bullishly, right? There's the reversal pattern, there's a failure pattern, and then there's simply wait for the turn, right, and just buy the dips, right? Just buy the pullbacks on the way back up. So reversal pattern, right, 3-point reversal, I teach this stuff to our students here at School of Trade. That's one option. Also, of course, what I think is going to be the easiest money is using these red lines here, using these resistance areas here. Just wait for the sellers to try to sell short at these areas and buy right into their stop losses, and then use these areas overhead for your profit targets. So my plan for tomorrow is I'm looking for seller failure as this price retraces off these lows. It may just collapse, and if it collapses, well, then obviously I won't be part of that just because I'm not looking to sell short right at this low. I need to get it up off these lows so I can then look for selling opportunities, right, that are much higher percentage. Sure, you can try to catch this falling knife right now, but I'd rather wait for it, get up off these lows, and then give me a chance here to really get a lot more profitability built into that position here on the S&P. Easiest plan is going to be seller failure. Look for the sellers to try and fail as we buy this thing back up, and then sellers, or should I say buyers, you know where your targets are, these big areas here overhead. I've got my eye on this measured move at about 74.5 here. It's a pretty easy measured move. You can project off those lows, right? Tough to say if we'll get there tomorrow. Again, I know we've seen incredible volatility here already this week, but this is the S&P here we're talking about, so it may be relatively slow here on it. So keep in mind here on the S&P, seller failure as we're oversold. If you want to be a buyer, if you want to be a seller here, got to stay patient right now. The easy money to sell short here, that definitely is behind us right now until we get a correction here on the ES. How about the euro? Let's keep moving. Euro is sideways and range bound as it gets tossed around by this soap opera they call Greece right now. The most important thing, remember, is to sell the highs and to buy the lows, fading all the breakouts of the short-term and long-term trading ranges. This one, boy, I'll tell you, this chart took me a while to kind of get my arms around. Do we have a trend? Do we not have a trend? I mean, clearly here, today was just straight up, right? And a lot of questions that came in this morning to our inbox just saying, what's going on with this issue in Greece? How is the euro going higher? And my exact words were, don't think so much. Just trade the chart you're seeing right now. But then I reminded them, remember, this gap down pushed us all the way down through range lows and down into that trigger zone. That trigger zone was waiting for us from last week. That's nothing new right there. So why did price jump off these lows? Because it's a sideways range-bound market. The exact words that I said last week, Thursday, Wednesday, Tuesday, Monday, all last week here, I talked about this. So we have a short-term trading range, we have a longer term trading range. And of course, whenever we see a range-bound market like we're seeing right now, you want to pay close attention to all the little medium-term, long-term range highs, medium-term, short-term, medium-term, long-term range lows, and fade all of these breakouts right now. For example, we've got price trying to break back above this trading range. This is a classic example. Break out, pull back, fade it, and sell it back in. Wait for the buyers to try to trade this breakout, and then fade it as we come back in. Most important thing right now is this market is going to be a challenge here. How long it will be, I couldn't tell you. Tell them to figure this stuff out in Greece, or at least until Greece stops taking center stage headlines every single second of every day right now. I won't even talk about any more about it. I told you last week how frustrating it is right now to have to kind of listen to this just dominate our markets. It is summertime right now, so we do know there's not going to be a lot of other stuff happening here. Everyone else is pretty much busy with the surfboards and sunblock right now. So Euro, sideways, keep fading all the breakouts. Buy those lows, sell those highs, buy those lows, sell those highs. And remember, my strategy always is look for the buyers to try and buy the highs and sell into their stops. Look for the sellers to try to sell the lows and buy into those stops, right? So if we have our sideways range here right now, wait for the buyers to try to buy at the high and sell it back in. Wait for the sellers to try to sell that low and buy it back in, right? Failures at the highs and the lows. That's what caused that price to jump so fast off that low, right? Because there's really balance right now in this market. There's no trend besides being a sideways trend right now. So price goes up, we sell it back down in. Price goes down, we buy it back up. Very, very simple. The hardest part on this euro is going to be there's going to be times of very slow price action this week. You got to stay patient through it. It's summertime combined with all the analysis paralysis you're getting out of Greece right now. Every headline is trying to chef up some fear. So don't read the papers, turn off the news media right now, trade the chart you're seeing, and fade all those breakouts here on Euro. And don't forget, guys, on stuff like this, you're not alone out there. Come out and see us in the trade room tomorrow. We'll walk you right through all this fun stuff here in real time. How about the crude? Boy, another one of those markets here. Big gap down. They tried to fill the gap, couldn't quite get the gap filled. What are we doing on crude? Nothing really has changed at all here on crude oil. We knew we had a bearish market. Okay, that's same thing. Nothing's changed from last week. We also knew that we had some range levels here, right? So just like we saw in the euro, there are multiple areas of ranges here. Short-term range, medium-term range, and there's even a larger range out there as well. A lot of markets going sideways right now. I'll tell you, the gold is the best looking chart of the week of the evening tonight. You know we are messy here right now in a summertime week when gold's the one that has all the rationale to it, right? It's like, oh boy, who's running the show here? But we know though that we do have a range here on crude as well, and we definitely have a bearish sentiment to this, right, to this trend right now. So try to make some sense out of this black gold. Crude oil is bearish after the weekend gap, trading all the way down to the lows of the range and the lows of the channel. So we get a lot of reasons here to see some short-term corrections. Buyers, of course, bargain hunting, sellers taking profit. So buyers, bulls out there have the short-term trading opportunities as it goes back up to resistance levels above. And sellers, you guys are looking for opportunities at resistance targets overhead. So really right now, pretty much the same plan we talked about for the S&P today, which was we know we have a bearish trend, but we're running right into major support areas here down around these range lows. We got a good distance away from the moving average there, that 200 moving average. 59, we'll say 59.50, and so we're at about 58.25 right now. That is nothing special to push back to 59.50 here for tomorrow's session. So right now, if you're a bull, you definitely have your short-term buying opportunities ready to go here right now. If you want to be a buyer, the easiest way to do it is to wait for the sellers to try and fail and buy that sucker back up. I would expect there to be some short-term buying opportunities on crude oil, long-term selling opportunities for you bears out there. So buyers, either look for the reversal pattern at this support. We may push one more leg down. There is an extension support here at 57.85. But bottom line, though, is just like I said on the S&P here, I have a very, very hard time being a bear right here. You might be able to get lucky and get a little bit more out of it to the downside, but we have to be running out of gas here. Yeah, okay, there was a pun intended there. No real pun intended, but I'll roll with it. So we know that we have, again, sellers are fully committed. I don't like the term oversold, but we're at the low of the range. I don't want to sell the lows. I don't want to sell at support. I want to be a buyer here. Just make sure, though, remember, the easiest money being a buyer right now in this downtrend is going to be looking for those sellers to try to sell short, fail, find some short-term resistance areas like you're seeing right here, 58.84, 59.14. Look for areas where sellers are going to come in prematurely, and then if they fail, right, we got a chance to buy right into those stop losses. If you're a seller right now, you've really got to be looking around this area here before you start really getting the best sells. Right, remember, this is a prior trading range down here, and most of the time, the first breakouts fail. This is not technically the first breakout, but it's the first real significant try here. So, again, being at the lows of the range, we do have a downward trend. Buyers, wait for sellers to try and fail at short-term resistance areas overhead. If you're a bear, stay patient and wait for those resistance areas overhead here and look for your shorts from there. We're going to have to really do a good job on this one tomorrow, waiting patiently here to be sellers. My gut instinct tells me here, though, that this gap down here just might get filled here in tomorrow's session. I know today was pretty crazy out there, but nothing really changed. Nothing really changed. There wasn't really any new, information that came out here. We are still pretty much treading water here until we hear more. Don't ask me more. What could crude oil be affected by Greece right now? Your guess is as good as mine. Remember, it's not reality. It's called the financial markets. There's very little reality in it. It's all speculation. So sellers failing for buying opportunities, and again, sellers, you guys really want to stay patient and get the best tradable opportunities here up off those lows. I'll be trading this market in real time tomorrow morning. Be watching for those failures together with our students here at School of Trade. Come out and join us. Last but not least, like I said, boy, gold looks the best, right? Gold, what is this world coming to right now? Gold looks the best out of all of them here. The S&P looks pretty darn well too, but gold's the only market that filled that gap. And if you remember, we got the correction we were talking about from last week, right? There was that spike in channel. We finally got that correction, and look at how fast that sucker sold right back off. Just goes to show you, those sellers were just looking for a reason to get back in again. They just couldn't do it before. So, boy, we really had a great week last week on gold. We nailed that bear trap. Talked about that last week on the newsletter. Don't fall for that sell at that low. And then, of course, we get the big correction off that spike in channel, helped out by the situation we're seeing right now in Greece. Here we have, though, gold is bearish in a long-term and sideways movement here. You know, we get a long-term bearish trend. There's no doubt about that. These sellers are still shooting for that 62.7. I know it's been a slow go of it here to the downside right now on gold. You can see we've got some easy targets waiting for us for the bears out there, but now we're clearly going sideways. Now we're clearly going sideways. We draw up the trend line. We draw down the trend line. And now we're starting to see a wedge here right now. What is this telling us now? It's telling us basically we're going sideways. We have consolidation. There's balance in the market. I wonder what they could be waiting for. Right? Yeah, it's definitely not the Chinese Lunar New Year. I'll tell you that much. It's going to be the or Canada Day. Did you know that? Canada Day on Wednesday? You better be ready for it. One of the biggest days of the year, Canada Day, July 1st. All kidding aside, though, sideways range. Clearly, they're all waiting on Greece right now. How do you trade something like this? Fade those breakouts. Buy support, sell resistance. Is there a bias to it? Yes, there is. We have a directional bias going down into this trading range, right? So directional bias before we went sideways. That means as we go higher, selling highs, that will be your highest percentage opportunity right now. Buying lows are also going to be an option. Just remember though, if you're buying those lows here, you are going to be going counter to that directional bias. So treat all the buying opportunities as scalps until proven otherwise. Sellers though, you guys have the higher percentage trades here in the longer term right now. How do we trade it? Sell those highs, buy those lows, sell those highs, buy those lows. I like to look for failure patterns at the lows, right? If we were to go lower here, look for sellers to try a couple times, try twice. When they fail after that second time they try to go lower, buy right into their stops. As we go higher, I'm waiting for buyers to try a few times. By a few times, I mean twice, right? Members, you know what I'm talking about. You know exactly what I'm talking about, members. And of course, look to sell those highs on buyer failure. Reversal patterns, failure patterns, or just wait for the reversal and then trade back into that range. Whatever we do, the hardest part about this type of environment on gold is going to be to stay away from the middle. Staying away from the middle of these trading ranges will always be the hardest part here. Guys, a lot of trading ranges right now. Got a lot of really balanced markets. It is very, very obvious that there's a little bit of analysis paralysis going on here regarding Greece. A little bit lower volume ahead of the very exciting 4th of July weekend. And of course, as you guys know, we're going to fade all those breakouts in sideways ranges. And gold's pretty much the only one here that's really biased to it, right? Directional bias. S&P's biased down. Gold's biased down. Crude's biased down. Euro is just straight sideways right now. So follow the plan, follow the directional bias, the highest percentage trades. And remember too, this is a shortened week here. We do have, did I have news up here? No news there. Let's bring up our good friends at Econo Day. We have a very short week here this week. We've got markets are closed on Friday. We are going to see some electronic markets trading, but you've got 4th of July weekend is going to be on Saturday. So you got to be really careful if you be trading on Friday. And then they had us on an early close. Nope, they removed that. So it's not a half day anymore on Thursday. They had it scheduled as a half day on Thursday, but pretty much it's going to be a half day on Thursday. So half day on Thursday, full day off on Friday, right? There'll be the fireworks getting started, everybody getting ready for the long weekend. So really we've got tomorrow, Wednesday, and really just the first half of Thursday before this week's over. So we better expect to get to this thing quickly here. Also, don't forget, guys and gals, I know you're watching this video by yourself right now at your computer. Thank you so much for watching. But you're never alone in your trading career. We help students from around the world launch a trading career every day of the week. And like I said, a career in the financial markets. We're not here to gamble. We're not here as a hobby. I'm here to show you guys proven and profitable trading strategies. Grab a copy of our free trial. I got a special invite for you guys to come out and test drive our live trade room as a guest. You can register for the free trial right on our homepage. Also, we have 3 levels of membership here at School of Trade and someone standing by to help you guys and gals out 24/7, 365. Don't be a stranger. Keep in touch. Leave me a comment below the video. Shoot me an email, JJ at School of Trade. Come out and see me tomorrow, either in our trade room in the morning as a member or in our trade room as a guest. And I'll talk to you guys same time, same place. Tomorrow morning, trade room opens up at 8 a.m. Eastern time. Tomorrow evening, nightly newsletter, same time, same place, 8 p.m. Eastern time for a Tuesday edition. You got it. Have a great Tuesday. Don't be afraid to come out and see me tomorrow morning to trade room as a member. And I'll see you guys next time. Adios, amigos. Bye for now.